Netflix stock is about to hit new record highs, surpassing $700 a share. Since 2022, Netflix has surged by 340% and seems poised to keep climbing. It has fully recovered from the declines in 2022. We'll explore Netflix transformation from a DVD rental service to a global streaming leader, covering its journey since its IPO and its future investment potential. From its IPO in May 2002 to its all-time high in November 2021, Netflix stock price skyrocketed by a mind-blowing 65,413%. If you had invested $1,000 at the IPO, it would have turned into over $654,000 at its peak. Let's start at the beginning. On May 23, 2002, Netflix made its debut on the stock market. The company offered 5.5 million shares at $15 a pop under the ticker symbol NFLX. At the time, Netflix was already the world's largest online DVD rental service, boasting over 600,000 subscribers and a library of more than 11,500 titles. Now, think about this for a second. In 2002, most of us were still battling with dial-up internet, and the idea of streaming high-quality video seemed like science fiction. But Netflix saw the future, and the IPO was their first step towards revolutionizing how we consume entertainment. But it wasn't just dumb luck. Netflix growth was fueled by smart business moves. They pivoted from DVD rentals to streaming, expanded internationally, and started producing their own content. This strategy paid off big time, especially from 2013 to 2024, when they saw massive growth in subscribers and revenue. Okay, so let's break down this growth a bit more. In 2013, Netflix market cap was around $22 billion. Fast forward to 2024, and we're looking at a market cap of approximately $296 billion. That's an increase of over 1,250% in just over a decade. This growth reflects Netflix's transformation from a US-centric DVD rental service to a global streaming behemoth. Now, every great story has its ups and downs, and Netflix is no exception. After reaching dizzying heights, the stock took a nosedive. From November 2021 to May 2022, Netflix stock price plummeted by 77%. So what happened? Well, for the first time in over a decade, Netflix lost subscribers, 200,000 of them in the first quarter of 2022. This shocked investors and raised concerns about the company's future growth prospects. It's a stark reminder that even the mightiest companies can face setbacks. This period of decline wasn't just about subscriber numbers. It reflected broader market challenges and changing dynamics in the streaming industry. Competition was heating up, with new players like Disney Plus and HBO Max entering the scene. The post-pandemic world also saw people spending less time at home, which affected viewing habits. But here's where it gets interesting. Since that low point in May 2022, Netflix has been on a surge. As of September 2024, the stock has climbed at an impressive 340%, trading back at its all-time high from November 2021. So how did they pull this off, this phoenix-like rise from the ashes? It all comes down to adaptation and innovation. Netflix didn't just sit back and hope for the best. They took action. They cracked down on password sharing, which initially seemed risky, but it paid off big time. In the first quarter of 2024 alone, they added almost 10 million new paid subscribers, way more than the 1.8 million analysts had predicted. This password sharing crackdown was a masterstroke. It converted a significant number of piggybackers into paying customers. The move not only boosted subscriber numbers, but also increased revenue without the need for hefty marketing spend. It's a testament to Netflix's ability to monetize its existing user base effectively. In late 2022, Netflix made a bold move by introducing an advertising-supported tier. Now, I know what you're thinking, ads on Netflix. Well, this decision has been a game changer for their financials. The ad-supported model has boosted revenue growth and profitability, helping to offset the massive costs of content production. In early 2024, this new strategy, combined with some savvy partnerships with sports leagues, sent Netflix shares soaring. Analysts are now predicting that advertising could become a major part of Netflix revenue by 2026. It's a classic example of turning a potential weakness into a strength. By offering lower-priced ad-supported plans, Netflix has attracted new subscribers and opened up fresh revenue streams. It's like they've discovered a new gold mine in their own backyard. The beauty of this model is its flexibility. Subscribers can choose between an ad-free and an ad-supported tier, catering to different preferences and budgets. This not only broadens Netflix's appeal, but also allows them to tap into the lucrative digital advertising market, estimated to be worth hundreds of billions globally. But Netflix isn't content with just dominating the streaming world. In 2021, they made a bold push into gaming. Their approach is all about enhancing their existing ecosystem. They've integrated games into their subscription model at no extra cost, focusing primarily on mobile games. It's a smart move. Mobile gaming is accessible to almost everyone with a smartphone. As of now, Netflix boasts a library of over 100 mobile games available directly on their platform. This move into gaming isn't just about fun and games, pun intended. It's a strategic play to increase subscriber engagement and retention. By diversifying their entertainment offerings, Netflix is positioning itself as more than just a streaming service. It's becoming a comprehensive entertainment platform. What's particularly interesting is how Netflix is leveraging its existing intellectual property in the gaming space. They're creating games based on popular Netflix shows and movies, which not only attracts gamers, but also deepens engagement with their content. It's a synergy that could pay dividends in the long run. Netflix's journey wouldn't be complete without mentioning its strategic acquisitions. Two noticeable purchases stand out: Millarworld in 2017 and the Roald Dahl Story Company in 2021. The Millarworld acquisition gave Netflix access to a treasure trove of comic book properties. This move was all about securing a pipeline of original content and potential franchises. It's similar to Disney's acquisition of Marvel and Star Wars, but on a smaller scale. The Roald Dahl Story Company acquisition, on the other hand, was a $686 million investment in timeless storytelling. With beloved stories like Charlie and the Chocolate Factory and Matilda under their belt, Netflix has secured a goldmine of family-friendly content that spans generations. These acquisitions demonstrate Netflix's commitment to owning and controlling its content. In an increasingly competitive streaming landscape, having a strong portfolio of original and exclusive content is crucial for attracting and retaining subscribers. So what does the future hold for Netflix? Analysts are bullish on Netflix for several reasons. They're impressed by the company's strong financial performance, successful pricing power, and strategic expansions into areas like advertising and gaming. There's also excitement about Netflix's potential in live events and other new content areas. Of course, it's important to remember that the stock market can be as unpredictable as the plot of a Netflix original series. While the potential for growth is exciting, investing always carries risks. Factors like increased competition, content costs, and global economic conditions could all impact Netflix performance. So, given everything we have gone through, what does this mean for Netflix stock, and when should you look to invest? Its stock performance over the years tells us everything we need to know. It has a solid history of rewarding its investors, but it does come with challenges. Netflix's almost 80% decline in 2022 shows it is not bulletproof, but the recovery proves that it has the ability to adapt and bounce back. If the bulls take a hold of the market for another strong run and the Nasdaq 100 follows the S&P 500 by setting record highs in the coming days, Netflix could potentially hit $1,000 per share in the next 12 months. I'm waiting for early confirmation that the next uptrend has indeed started before considering adding this to the portfolio. The tech world moves fast and anything can happen, so you need to be calmly prepared for all eventualities. But remember, the odds are always with the bull trend until they aren't. My philosophy is to always side with the bulls, but protect myself from the bears through good risk and exit management. Netflix is one of several IT stocks poised to rise significantly. If you're interested in discovering more IT stocks that could boost your portfolio, watch this video where I reveal insights about big tech stocks that other influencers and investors have totally missed and just aren't talking about.